wealthbranch.com.
5 steps for a winning dividend strategy. These are somewhat advanced dividend strategies that utilize yield on cost to your advantage. This type of investing assumes a 5 to 10-year investment horizon in the same stock. Therefore, it is not for short-term investors. In other words, the only reason for making an investment and laying out money now is to get more money later on, right? That's what investing is all about. Warren Buffett. Check the dividend fundamentals. Before spending a lot of time analyzing a company and getting excited about the dividend yield, take a look at the company's fundamentals. Here are a few things to consider when investing in a dividend stock. A low dividend payout ratio. Lots of cash. A consistent dividend history with no dividend cuts. A consistent and high dividend growth. A high yield on cost. An increase in forward dividend yield. Price drops because of the increased dividend yield. Yield on costs, a reason to hold. Knowing you own a quality company with growing dividends and understand the power of yield on cost should give you the confidence to hold for the long term. Selling a good company with a high yield has consequences, such as you will have to pay capital gains or sell at a loss. It will continue to cost more to own the same amount of shares. You will probably not be able to find a comparable safe alternative. For example, if your investment in Microsoft and it has a 15% yield on cost, it would be hard to find a safe alternative that pays 15%. All the safe companies will most likely be paying 2 to 3%. A REIT that pays 15% would most likely be a riskier and lower quality company than Microsoft. Making the switch would also mean paying long-term capital gains. Special dividends. A sometimes overlooked dividend strategy is to hold a long position in companies that reward their shareholders by paying a special dividend on occasion. Here are some example announcements shareholders like to see. April 25, 2017. Costco Wholesale reports special dividend of $7 per share. August 21, 2018. LyondellBasell acquired A. Schulman, declared a quarterly dividend of $15. November 16, 2018. Haverty's Board of Directors authorized a special cash dividend of $1 per share. Generate more dividend income than future loan rates. This strategy is a riskier strategy for investors who do not have cash flow concerns. If you are confident that the yield on cost is correct or going to be high in the future, you could invest the money now and take out loans in the future with the expectation of paying a lower loan rate than the dividend rate. Example thesis. You plan on buying a new car in 5 years, and you calculate the 5-year yield on cost of a stock is going to be 12%. You also predict that the loan rate for autos is going to be around 6% or lower, based on the world banks all fighting to devalue their currency to keep their citizens employed. Being ready for a dividend discount. A great investor does their homework when times are good, so they are ready to shop when times are bad. A stock with an attractive dividend yield often gives investors the confidence to buy or hold a stock when the markets are bearish. During a market correction or crash, there is a limited time to pick up dividend stocks at a deep discount. If the fundamentals of the company and economy are strong, the stock price should recover, giving you a fantastic yield on cost.